Okay, hello everybody. Well, thanks a lot for coming today. Pleasure to be at HCC again this year. So today we're going to go and delve a little bit in the wonderful world of social media influencers and what's going on in the crypto market. So before we start, one thing that this talk is not going to be about is obviously investment advice. There's no investment advice. And I would like to acknowledge a lot of the work that I'm going to show you comes from Eric. Any mistake is mine, and a lot of that also comes from our labs team and our data science team. So let's get started. So what we'll try to look at today is, okay, what is affecting crypto, right? Do we have any fundamentals? And if not, in the market void of fundamentals, what is driving the price of crypto assets? And what is driving engagement, how people interact with those protocols, right? So we're going to try and look at different data sets to answer these questions, trying to understand how opinions form on social media. We'll have a little glimpse at Elon, and especially recently with Twitter, so we'll have a look at Twitter data for Elon. And finally, we'll try to answer the question, can you trade on the sentiment of the Twitter chatter? So we'll start with the data sets to set up the stage. Then we'll go into how can you measure crypto adoption through social media. There are a lot of other metrics you can look at, but we'll focus on social media for this talk. And then we'll delve deeper into influencers and Elon. Is he an influencer? Is he influential? TBD. And finally, we'll end with the impact of news, right? In the traditional markets, when news get published on Bloomberg, Thomson Reuters, and other mainstream publications, often you see an impact that's very quickly incorporated into prices. Do we have the same in crypto? Is there an impact over what timeline and on what type of information? And finally, we'll have a little bit of fun and just try to see if there are ways to trade on that information that is present on social media. So data set. So before we start, just a little bit about us and what we do. So I'm Sacha from the thaiio. So we're an institutional service provider. We have our main product is the front end, and we provide institutions with all the information that they need to operate in crypto, focusing on market-moving information. So hence the idea for this talk, and we'll focus on a subset of our data sets, including some market data, very simple market data like prices, market cap, what we call significant developments. So these are our proprietary tags that you can see on the right. So these basically show you, go to thousands of sources in real time. These sources are completely crypto native, so we're not just looking at a Yahoo Finance or a Bloomberg, we're also looking at Medium articles and blog posts. And for each news that come in, we'll get a tag, we'll get the coin that it's associated with, and we'll get those in red significant developments that tell you kind of corporate actions for cryptocurrencies. The bulk of the data set I'll talk about today, obviously, is the Twitter data set. We do a lot on Twitter. First, obviously, we have the tweet volumes that incorporate a pruning of bots. So we try to filter the noise by removing a lot of the bots. Maybe Elon wants to know a bit more about that. We also do a sentiment score. So on each tweet, we'll go and rank each word to understand, is the sentiment positive or negative? We have a bunch of models for this. And number of followers, geolocation of the accounts that posted the tweet. And finally, a bunch of other social media sources just to make things a bit more interesting, including YouTube. So what is crypto adoption? Before we get into influencers and get closer and closer to something that looks more like fundamentals, step by step, what is crypto adoption? One thing you would think about crypto adoption is how many people hold cryptocurrencies? Well, in that room, I'm not going to ask the question. But you could also look at how many people are interested in looking at cryptocurrencies, or you could look at how many people talk about cryptocurrencies. So here is a snapshot from one of the tools we've built to look at the distribution of tweets across the world by different tokens. So here we're looking at the distribution of Twitter activity on Ethereum across the planet over the past month. And if we zoom here on the little chart on the right, you will see that in France, something is happening this week. The interesting thing, if you zoom in France, is you'll see that the top coins are actually GMT, so I guess people are doing a lot of exercise in Paris. BTCB, which is interesting in light of all the announcements that have been going on recently with Binance and the AMF. Tezos, French shout out, and obviously Celsius in the current market, but we won't say anything about that. Now, this is on a global scale, so to try and focus, we'll go a little bit further, not too far outside Europe. So let's go to the UK and see how crypto adoption looks like in the UK. So one thing that's important is to obviously normalize the number of tweets that you see by the population of each region. So if you look within the UK over 2021, you see a lot of activity in southern England, not as much per capita further north. And if you look at Ethereum, you will see that obviously everything is dominated by London. There is somewhat of a not close correlation between London and other UK regions. But you can see that there are a few peaks, obviously, that move the market that you would also see if you looked at Bitcoin. But let's look at a meme coin just for fun. So how about Dogecoin? Same. You can see that London crushes all the rest of the other regions. One big difference, though, is that if you look at other UK regions for Ethereum, there's still activity in all the other regions across time. When you look at Dogecoin, it's completely correlated around those big peaks. Anyone care to guess what this big peak is? You're right. Elon Musk on SNL. So as you see, the behavior on social media for meme coins and for more quote-unquote fundamental coins or coins that have more utility is quite different. And if you look at a moving average of those for Bitcoin, Ethereum, and Dogecoin, what you'll see is, again, when there are phases of high activity, everything starts activating itself on Dogecoin, whereas it was already activated on Ethereum and Bitcoin. What's interesting here is to notice that all the peaks, the large surges in activity, often started on Dogecoin in 2021. So then you first had the bumps for Dogecoin, and then it propagated through Ethereum and Bitcoin. It's not causal, but it's interesting to observe. And if you look at those different coins across the different geographies, what you'll notice is Bitcoin and Ethereum are pretty similar, and Dogecoin is quite different. In a sense, it shows that Dogecoin responds to different types of stimulus than other cryptocurrencies in being a meme coin. So, speaking of Dogecoin, first step in a market that has no fundamental is you look at, okay, what are people talking about and how are they getting influenced? So that's why we can look at influencers. One great place where people get information, if you listen a little bit to all the Discord channels in crypto, is YouTube. So you have all those YouTubers that publish a lot of content to explain, democratize, and make all those crypto projects more understandable. So as expected, if you look at the number of average views versus market cap, there is a clear correlation. The bigger the market cap, the bigger the interest, the bigger the number of YouTube views that those top videos get. But how does the evolution of an influencer's following evolve over time? What's very interesting there, so here we're taking a couple of random influencers and we're looking at their following over time. What you'll notice here are a couple of things. First, if you look at the top blue line, you see that it's completely outperforming its peers. And by even the rate of increase of their following is much higher than the rest. We see a sort of mix of 3 influencers in the middle, and then one that's struggling to keep up. What's interesting there is those jumps. Every time you get big jumps, and that's the way influencers gain traction. You get a viral post, you get something that is of a lot of interest, and suddenly, all of a sudden, your number of followers increases, and it seems to be quite sticky. So it's not linear. It's not about gaining followers over time. It's about getting those pieces that are going to boost the number of people who are going to start following you. So on to the awaited question of who is the greatest influencer, or worse, who knows? Elon, of course. So just a first quick look at what happens when Elon tweets. If you look at Bitcoin, well, here's a snapshot of the past year. He hasn't been that active on Bitcoin, but you can see around beginning of 2021, was it when I think they announced something around Tesla buying Bitcoin or offering Bitcoin payments. Well, but more or less what you can see is there's a lot of tweets, hard to see much on that chart. So let's move over to Dogecoin. That's kind of a different picture, right? So he's been quite active for that period, and then after January 2021, April, May, as we pointed out a few slides ago, and then it exploded. Still, not the most convincing way to see impact on prices. So what about if we looked at this? And I'm not going to give you the answer or say that for sure Elon impacts prices. The only few comments I will make on that chart is what this shows, basically by windows of 12 hours, it shows you the maximum return, so the maximum relative change in price of Dogecoin. So basically a big peak means there was a big spike up of the price. A negative peak means that it was only a down market, and the time at which people lost the least amount of money over the 12-hour period was around minus 10%. What you'll see here is the magnitude of the change, the top changes over 12 hours was much higher over 2021 than it is now, and there was a lot of tweet on those spikes around then. Moving to more fundamental aspects, news, new information should move markets as we expect from traditional finance. Is that the case in crypto? So we delve into the significant development that we gather and tag automatically on all those thousands of sources. And basically what we're going to do is look at the abnormal returns. So basically on average, every time a piece of news is published, what is the reaction on price 24 hours later? And if you look at this, you basically center around each event and look at the evolution of price of the tokens that are mentioned on this piece of news and see if there is a consistent pattern in the movement of price. So what you see here is basically the most negative on the left and the most positive average movements over 24 hours. And you see error bars that are important to have an idea of the distribution of those changes in prices to really know, and these error bars, by the way, are not on the distribution of the movements, they're on the distribution of the average return. So what you can see here is what moves in a positive way is mainnet updates, network status updates, listings, M&A activity, obviously. It's not clear for airdrops, which is interesting. There may be some additional filtering to do. And negative, any type of financial earnings, stablecoin, DPEGs, obviously, having is an interesting one, delving into it further. So can you make money trading on sentiment? One thing you can do is, let's get the top market, the top 100 coins by sentiment, the one that have the bigger sentiment, the highest score. this is what you'd see. So recently you see it's not doing really well, especially in 2022. Another way you could look at this is, and by the way, this shows the cumulative return. So I'm starting with a portfolio of $1, and then over time you see how much my portfolio evolves. So here you get a top of 6x on your portfolio, and basically you're more or less a little bit more than even if you had started back early 2021. What if you took only the top 20, or only the 21st to the 40th, etc., right? So these we're looking at quintiles of sentiment over time, and similarly, the top one performs really well, but you would be really, really down if you had started at the end of 2021. How can we make this better? And that's where the beauty of being able to go short or to short an asset is interesting. So what if now we took the top performers in terms of sentiment and actually shorted on the other leg, we would fund that strategy by shorting the bottom performers. And in this case, what happens is you get this. Can we improve this? Well, maybe now, instead of taking the top minus the bottom, I want to look at still the top, but I don't want to be completely dependent to the bottom, because I don't know, some of them are smaller, some of them might actually get spikes in prices that I can't control, that are not related to anything truthful in sentiment. So what if I just short the basket of top 100 by sentiment? And finally, what if now I did a mix of actually getting the top minus the bottom, but in some cases, if I'm not happy with the top 20 and I don't think they have enough potential, I'm going to take the whole top 100 by sentiment and still short the bottom, because they're the ones who underperform. Now, how do we compare the strategies? In traditional finance, you look at risk-adjusted returns. You're going to look at what's called a Sharpe ratio. Typically, a Sharpe ratio above 1 is good. Below is not that great. The S&P for quite some time was around 0.7. I don't know these days. So here, as we can see, the best strategy is the number 3, where you do a mixed approach of what type of portfolio you do with rebalancing. Obviously, this doesn't take into account any fees, any rebalancing costs, any market impact, or any cost of funding your positions, especially for the short leg, nor about the ability of being able to place that short leg. But I thought it was interesting to see that there may be things that you can do with sentiment data. I'll open it for questions, and Phil, always love talking about those types of social media or broader data questions, so feel free to reach out. Any question? Anyone wants to share their favorite shitcoin? Good. Thanks, everyone.